Rajeev Khandelwal from Webtel, and today we'll be talking about clarifications on GSTR 9 and 9C, that is the GST annual return and the audit report by the department by the press release on 3rd of July 2019. Before proceeding, I'll request you to subscribe to our YouTube channel Webtel Electrosoft if you have not already done that, because we regularly upload various educational videos on GST, income tax, etc. here. And also we have a Facebook group, GST Tutor, where we post various posts relating to GST and other updates, etc. So we'll proceed with the topic. So as you're aware that the department has on 3rd of July issued some clarifications on GSTR 9 and 9C. Earlier also they had issued some clarifications. So what are these clarifications about? Let us try and understand, because they are important also. First of all, we'll be talking about the things relating to GST audit. There was a lack of clarity regarding which period to consider for GST audit, whether we have to see the turnover from the period for the full year, that is April 17 to March 18, or from the relevant GST period, that is July 17 to March 18. And from time to time different people had advised different things. Even ICI had advised in its guidance note that the full year turnover should be taken, because section 35 subsection 5 says that the turnover for the financial year, and it said that later on there could be problems. That is why they were advising that full year should be considered. Recently on the GST common portal also they had given a clarification or a guidance that turnover for the full year should be considered. But now what they've done in this clarification, let us see. Let us take the case of a company, AB Limited, which has two branches, and the turnover from April to June 17 of branch A was 30 lakhs, branch B was 50 lakhs, so total was 80 lakhs from April to June. Turnover from July 17 to March 18 was 90 lakhs for branch A, 100 lakhs for branch B, total 190 lakhs, and the total turnover for the full year for the company was 270 lakhs. So in this case, whether GST audit will be applicable or not. So it has been clarified in this press release that the turnover from July 17 to March 18 only has to be considered. That is why, though GSTR 9 will be filed in both the cases, that is branch A and branch B, obviously as a company as a whole it does not need to file a separate GSTR 9. As regards audit, since we have to see that on the company level, so since the amount does not exceed 2 crores when we talk about the turnover from July 17 to March 18, so GST audit will not be applicable, and therefore neither branch A nor branch B will be filing GSTR 9C. Let us take another, so here GST audit is not applicable. Let us take another case study where in the two branches have a turnover, similar turnover, but in the period from July 17 to March 18, the turnover of the company as a whole is exceeding 2 crores, that is 2 crores 10 lakhs, and that is why GSTR 9 will be applicable, that is GST audit will be applicable. GSTR 9, in any case everybody has to file, so branch A and branch B will be filing GSTR 9 here also, and in this case even 9C will have to be filed separately by each of these two branches, and on a company level we decide that the GST audit is applicable. Then another very important question was, what is the role of the GST auditor? Because one is the reconciliation of the books of account. He has to reconcile the books of account with the GSTR 9 that is being uploaded or that has been uploaded. He has to reconcile the two. That is a part of GST audit. Then also many experts were saying, and even otherwise there was a belief that the other liabilities etc. which were not there in the books of account or in the annual return needed to be reported. Here the department has clarified that the GST auditor does not need to go beyond the books of reconciliation of the books of account and GSTR 9. So I think that is a big relief, a big breather, and it was because of this reason also that many people were delaying GST audit. So I think now it is clear that they only have to reconcile the figures of the books of account and GSTR 9. Another important clarification regarding GST audit report relating to table 14, which is expense wise reconciliation of ITC. So again, that was a very difficult task. People were finding it very difficult, and another issue was there was no clarity as to which expenses needed to be shown here. So again, that issue has been clarified. They are saying that reconcile only those expenses where ITC has been availed. So only those expenses needed to be considered. Take your P&L account, and for 9-month period in which GST was applicable, you give only those expenses where ITC has been availed. And they say that this list of expenses is a representative list of heads under which ITC has been availed. The taxpayer has the option to add any head of expenses or remove any head of expenses. That is why the heads where GST is not applicable, like employees' costs, salaries, wages, they should not have given it in the first place, but since they've given it, so we should not take them, and only those expenses where ITC has been claimed need to be shown here, need to be reconciled ITC wise. Then coming to the annual return or the GSTR 9, there we have this table 5 in which we have to give the details of the exempted, nil rated and non-GST supplies, besides some other supplies also. Now here again there was some confusion as to what is to be given, because even section 2 subsection 47 defines exempt supply as a supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt from tax. So it seems that exempt supply here means exempt supply also and nil rated supply also. So one did not understand what is to be given in 5D or 5E. Now they have clarified that there may be some overlap between supplies that are classifiable as exempted and nil rated. Since no taxes payable on such supplies, the government is not too much concerned about them. Though issue of reversal of ITC is there, that is why they are asking for this information here. But they say if there is reasonable or explainable overlap of information reported across these tables, such overlap will not be viewed adversely. Please see the words, if there is a reasonable or explainable overlap of information. So if there is an unreasonable or unexplainable overlap of information, it may be viewed adversely. So let us understand some minor differences could be okay, but otherwise information should be properly reported here also. Then also in 5F they say non-GST supply, and it includes no supply also. So what is this non-GST supply? Non-GST supply is supply of items which are outside the purview of GST, like supply of alcoholic liquor for human consumption, petrol, diesel, aviation turbine fuel, etc., etc. These items are out of GST, but they have to be given in this table 5F. And it says it also includes no supply. What is this no supply? This is basically items which are there in schedule 3, that is activities or transactions which shall neither be treated as a supply of goods nor a supply of services. So even services by an employee to the employer in the course of or in relation to employment or sale of land and building where completion certificate has been obtained, these kind of things, even they have to be reported here. So please be careful that even this kind of information has to be given. Then another important clarification in this press release is that no ITC through GSTR 9. Neither ITC can be availed through GSTR 9 nor ITC can be reversed through GSTR 9. Earlier it was clear in the instructions etc. also that no ITC can be availed through GSTR 9, but in this press release says that even reversal of ITC cannot take place through GSTR 9. That is, all whether availment or reversal, that has to take place through 3B, and neither of the two can be done in GSTR 9. And if there is an ITC reversal, you can make the relevant payment through DRC 03, which can be reported in the audit report. This will not be reported in the GSTR 9 or the annual report. Then another issue they talk about is the duplication of ITC availed. In sometimes there may be a case where you have availed some ITC and later on because payment was not made, you reverse that ITC. In such cases, some people have shown it like this, that they have shown it in 6B as 50,000 and in 6H they have shown 1,000. So total 51,000 has been shown, which is duplication of this amount. Actually, the amount should have been shown as 49,000 in 6B, 1006H, so total amount should be 50,000. It cannot exceed 50,000 because the total ITC is 50,000 only. Some people could have also shown it like this, that in 6B itself, since in the same year it has been availed and reversed and again reclaimed, so in that case they can show it in 6B itself, and in 6H the amount could be 0. So I think the better approach is the one shown at the top, but if you've shown it at the second option, then I think that is also fine. That is what the press release says. Then another issue is that many people, they say, are bothered about 8D. What is this 8D? Basically in table 8 they are talking about lapsing of ITC, and in table 8A they talk about ITC as per GSTR 2A, and in many cases you are aware that this amount is not matching. The amount which is auto populated in GSTR 9 in this 8A is not tallying with your 2A. But they have given the reasons also why this is not tallying in the earlier press release. So there could be mismatch in that also. And they say that this information is updated as on 1st of May 2019. Subsequent filing of GSTR 1 may update GSTR 2A, but values here will not be updated. GSTR 9 in table A, the information will be as updated as on 1st May 2019. Subsequent changes will not be updated here. So let us say this amount is 50,000 and ITC availed in 1718 through 3B of 1718 is 35,000. ITC availed in 1819 for 1718 again claimed in 3B of 1819 is 12,000. So balance total 47,000 has been claimed, balance 3,000 we have not claimed, and that is why this 8D will show this difference of 3,000, and it is basically short claimed in 3B and it will lapse. And the department says that taxpayers need not be concerned about the values reflected in this table. You are losing your ITC, so you should be concerned, but they say there is nothing that can be done, so you better not be too worried about this. Then RCM paid in 1819, RCM relating to 1718. In many cases, the auditors later on pointed out the businesses were not aware that they had to pay tax on RCM. Auditors later on pointed out. So if in a normal case where ITC of 2017-18, RCM of 1718 was paid through 3B of 1718 and ITC was claimed in 1718, this needs to be shown in GSTR 9 of 1718. However, if RCM of 1718 was paid in 3B of 1819 and obviously ITC was claimed in 1819, this needs to be shown in GSTR 9 of 1819. And the department also says that if there are any variations in the calculations of turnover on account of this adjustment, the same may be reported with reasons in GSTR 9C. So that means that in part 5, we need not show RCM of 1718 paid in 1819. This is to be shown in the next year's return. Then many times issues come that which supplies have to be shown, which outward supplies have to be shown in the GSTR 9, and we have different figures of GSTR 1, 3B and the books of account. So obviously the ideal situation would be where the books of account GSTR 1 and 3B match, but that is the ideal situation, but practically it does not happen. In practical situations, the books of account GSTR 1 and 3B in most of the cases have something or the other which is different. Some missing figures are there, some additional figures are there, so that is the problem. So because of this, what will happen? There will be two scenarios. Either the tax will have been short paid. There could be a case where in the books of account the sales or outward supplies are more, but you have paid lesser tax in 3B, or even in 1 you've showed lesser sales. In that case you have paid short tax. In that case you have to declare this outward supplies or sales in GSTR 9 and pay tax via DRC 03. The other case could be that you have paid excess tax. In this case again you have to declare this in GSTR 9, but please understand that no refund is payable via GSTR 9. Merely by filing GSTR 9, you will not get any refund if some excess taxes have been paid during this year. You have to claim refund via GSTR RFD 01A. You have to file this form and then only you will get the refund. and you have to pay the unpaid tax. This tax may be payable due to no payment of tax, short payment of tax, you have obtained or been granted refund by mistake, or wrongly availed ITC. So the department says that you are getting a unique opportunity of self-correction, and if you do that, if you pay the amount before any notice of demand, you pay this amount with interest in DRC 03, then no penalty will be levied. So some people say that we'll pay it later on when we get the demand notice from the department. So department is saying, please do it now, do not wait for notices from the department, else even that at that time even penalty would have been levied. So let us discharge all kind of liabilities like these on a self-assessment basis, and they say that GSTR 9 provides an additional opportunity in this regard. Talking about credit notes for supply of 17-18, if these credit notes are issued up to 30th of September 2018, then obviously GST can be reversed. Whatever GST was paid on the gross amount, and if there's some reversal in the outward supplies, in that case even the GST can be reversed and you can claim that benefit of the reversal of the GST. But if these credit notes are issued after 30th of September 2018, these are basically financial credit notes, and in such cases no GST reversal has to take place, and if that is done, they should be reported in your audit report. So for credit or debit notes, if the provision has been made in the books of account of 17-18 and they have been issued and declared in returns of 18-19, you have to show these in part 5 of GSTR 9, and you have to show that in 5.0 of GSTR 9C or the audit report. This is basically, this item 5.0 is relating to difference in turnover due to any other reason. So that is how the credit or the debit notes which were provided for in 17-18 but were shown in returns of 18-19 have to be shown in this table. Then many times people are also concerned about table 16, because here you have to give supplies received from composition taxpayers, and in many cases, in fact in most of the cases, people are not aware whether the supplies received are from normal taxpayers or composition taxpayers. So again, I think a lot of representations were being received from by the department, and now they have clarified that you please declare all such data details which are not part of the regular statement of the returns to the best of your knowledge and belief and the records. This data is only for the purpose of information. Reasonable explainable variations in the information reported in these tables will not be viewed adversely. That means unreasonable or unexplainable variations in the information reported in these tables will be viewed adversely. So again, some minor differences are okay, but major differences should not be there even in this table. Similarly, of HSN summary of inward supplies, here also they say that declare all such data to the best of your knowledge and records. Again, this is for information, but please ensure that unreasonable or unexplainable variation should not be there even in this table of HSN summary of inward supplies, which is table 18. And finally, they say please file in time, well before in time, otherwise at the last moment there could be issues, and do not every time expect extensions, and because even there are other due dates also, so it will be very difficult for the government to extend the due date again and again. So we have got ample time now, and just see the number of days that are remaining and the number of your clients. If you have 50 days and you have around 50 clients, that means you have just 1 day for filing annual return and audit report for that one client. So please do it in time, otherwise at the last moment there could be mistakes, etc., and you are well aware that there is no option to revise GSTR 9 or 9C. So that was all I wanted to talk to you about. Thank you so much.